First came the bricks, and more recently the mints. But what exactly is the impact of burgeoning emerging economies on the future of the luxury industry? According to Euromonitor, a triumvirate of economic growth, continued urbanization, and booming appetite for luxury means a new generation of emerging markets looks set to be primary drivers of growth in the next 4 years. By 2018, these new markets, with the exception of China, will generate a quarter of all luxury sales. Sales in the Asia-Pacific will almost double to reach $125 billion annually, making it the world's largest market. But forces at work in certain regions may temper industry optimism.
One of the major headwinds in the global economy is the fact that China has slowed down substantially, and that's likely to persist. And that's having an impact on other emerging markets that depend heavily on the Chinese economy. Another major headwind has been the reversal of U.S. Federal Reserve policy, which has put downward pressure on the currencies of many emerging markets, forcing those countries' central banks to raise interest rates in order to stabilize their currencies. The effect of that has been and will be a substantial slowdown in economic growth in emerging markets, including the Asia-Pacific region.
Despite these stumbling blocks, some of luxury's brightest stars are continuing to leverage their brands in these new markets.
The strategy in China and Southeast Asia is based on the continuity versus the past. We kept our values from the very beginning when the company was born in 1966. Of course, in China it's happening quicker than in any other region. So in China now there's a segment of consumer that feels that being too ostentatious is tasteless. So they approach brands that are more subtle, more understated, like Bottega Veneta. That doesn't mean that the logo is disappearing or will disappear, but the segment that we are in is growing faster than any other segment.
The sub-Saharan African market may be small, with sales of €2 billion last year, but it's become the industry's fastest growing region after Latin America. Many Western brands like Zegna, MAC and Hugo Boss are now kickstarting their retail expansion efforts. But locals on the ground helping them transition into the market say they face considerable challenges.
Big headaches, but not insurmountable. First, they have to deal with government, with regulations, with bureaucracy that goes with establishing a business or a brand in a new market. Then you must deal with the absence of retail infrastructure because you do not have the usual high streets which you are familiar with. And then, of course, you have to deal with the local people. And of course, unless you are working with a local partner who really knows his onions and is familiar with the retail business, then it's going to be really quite tough going.
In Latin America, prospects have been blighted by heavy-duty tariffs, sending prices on premium foreign goods sky high. This is particularly the case in Brazil, which has now been overtaken by Mexico as the region's #1 luxury market. But what does this mean for local players like H. Stern, the Brazilian jewellery brand that has 150 stores globally, but still sees the bulk of its sales at home?
This year in Brazil, we have two events, the World Cup and elections. The World Cup, it's not so good for the local market because a lot of people will travel and not stay there. And elections is also not so good because people are a little bit skeptical, a little bit afraid about the future. So the advantage is that we're going to get a lot of tourists, but it's going to be a tough year.
But the global picture isn't all doom and gloom.
Despite the slowdown in emerging markets, there are some bright spots. And I think there are a couple of countries that are likely to recover more quickly than others and that have good growth prospects in the next few years. These would include the Philippines, Indonesia. In Latin America, I would look at Colombia, Peru, Panama, and here in Mexico. And then I would also look at much of sub-Saharan Africa, which is doing quite well right now.
So just as when hemlines rise, then surely they'll fall, competition in both the mints and other frontier markets continues to hot up. Brands will keep spending lavishly both on marketing and infrastructure, desperate to tap into the minds, hearts and wallets of millions of new consumers. This is Elizabeth Paton from the FT Business of Luxury Summit, Mexico City.